Get ready for some epic trading ahead. This is DLT Capital Markets Forex Trading. Please like, share, subscribe, and comment. And welcome back to the channel. This is DLT Capital Markets Forex Trading on YouTube. And this is your host, Trader DLT. Today we're going to do a quick reaction video to this trader, Ilya Sivkov. He's an excellent trader. He's an excellent teacher. He's got very powerful insights into the market, and we're going to look at how to properly draw a trend line. When I first started, teachers just pretty much said, okay, to draw a trend line, to draw an uptrend line, you find your swing lows, and you just connect the swing lows and go up from there. And to make a downtrend line, you connect your swing highs and you go down from there. And that was pretty much it. They said an uptrend is made up of higher highs and higher lows, and a downtrend is made up of lower highs and lower lows. Okay, well, that wasn't too bad. However, even though it's pretty much generally okay, what we want to do is draw a trend line for what? For the purposes of how to trade it, right? So here Ilya is going to show us the proper way to draw a trend line. Starting from a low, you go up a wave A, and there has to be a retracement to a lower intermediate low of wave B, and then you anticipate that the uptrend will continue from there. So you can connect the lows when that happens. Watch. Let's hear how Ilya explains it.
Last higher high we can see is here. After price created a higher high, it pulls back for a higher low, and then when price creates the higher high, that's when you have a trend line, guys. This is very important, and this is only when you're going to draw your trend line. Why? Because if price action pushes up here and finds resistance at this, so this is not a higher high, well, your rule is not met. Wave C did not close higher than the high of wave A. So currently you have a double top potentially. And the probability of this trend line holding, it's much lower than if you have a higher high. So in such occasion, your trend line might get broken, and then an opportunity could be if price comes back for a retest and creates a lower high. But this is another situation, and as you can see, there are a lot of possibilities of the market. So currently sticking to the rules, we have a higher high, and that's only when we have a trend line. And next, how do you trade this? Well, very simply, guys, with Fips, and usually the high of wave A will serve you as a supportive region. So if you draw it like something like this, and then you have a Fibonacci, for example, at the high here, and you will expect price action to pull back to the trend line, to a Fib level, and to the high of wave A, which is a very nice confluence. And when you see all of those confluences aligning, you have a high probability trade.
Okay, so this is a very important point here. When the price retraces from the high of wave C back down to the trend line that you already established, and that pullback is in the general vicinity of the old high of wave A, then you've got a very high probability trade setup, because your trend line is valid. Your trend line was validated by the retracement of wave B and by the rally of wave C. As it retraces back to the trend line, and it's going to be near the zone of the high of wave A, you have a very high probability that price will continue from there to the long side, and you have the opportunity to come in long with a very low drawdown and a very high risk to reward ratio. Let's hear Ilya continue with his analysis.
So to sum everything up, guys, we have a lot of drawings here. We need wave A, wave B, and wave C. We need wave B not to close below the low of wave A, and wave C should create a hard high. So we should have a clear bullish wave in order to introduce a trend line, because a lot of you guys just see price action starting to support here. It even hasn't begun to push and you immediately draw your trend line. But this is not correct, because when price action comes back here probably for a retest, you will enter buys. But if price action is not able to continue to create a high, then the probability of this reversing to the downside is big, because this could be a lower high of this structure here, and then you might have a trend line like this. So that is why it's very important to stick to the rule and apply it always. If you don't have a hard high, you do not have a trend line. So right now it got pretty messy. Let's go to the real charts as we always do to find some trend lines and to see how we're going to trade them.
Okay, so the important thing was for the price to close higher than wave A, right? The important thing was for price to close higher than wave A. See how wave C is higher than wave A? It's not until that is established that you can then draw your trend line. That is what makes it a valid trend line and a high probability trade. So let's see how Ilya now explains the short.
Very important to stick to the rule and apply it always. If you don't have a hard high, you do not have a trend line. So right now it got pretty messy. Let's go to the real charts as we always do to find some trend lines and to see how we're going to trade them. Just quickly to cover the situation for a short bias market and a descending trend line. So you see we have again wave A, wave B, and wave C, and our major rule is slightly different, but you should know that. So wave B should not break the high of wave A, because if it breaks the high of wave A, we will be having a high, which is not good for a downtrend. Then it should create a lower high, because if it closes lower than the high of wave A, we will be having a lower high, right? And we have the low of wave A. Wave C should close lower than this low, and it will create a lower low. And that's only when you're going to insert a trend line. And then you will be waiting for price to retest back at structure point, Fibonacci, and a trend line, and you're having the highest probability setup. All right, guys.
So that's the same thing on the short side. We have to wait until that wave C closes lower than the low of wave A, and that will be your confirmation to then draw your downward trend line. Similar to just same as the long, except in reverse, right? that point was never clear to me at the beginning. I just saw the high points in the price chart, and I would draw my downtrend line, and then I would try to go short, and then the market would reverse on me. So if you ever wondered why the way that happens, well, that's probably why, because we did not wait for the price to exceed the low of wave A on the downtrend to confirm our downtrend line.
Or high, right? And we have the low of wave A. Wave C should close lower than this low, and it will create a lower low. And that's only when you're going to insert a trend line. And then you will be waiting for price to retest back at structure point, Fibonacci, and a trend line, and you're having the highest probability setup. Alright guys, here we are, Euro USD daily time frame. I can see a lot of examples here that will help you grasp the concept. And if you appreciate the fact that I always go to the live charts to show you how do we implement the textbook examples, make sure to hit the subscribe button to support my channel and to give me motivation to create more and more educational content. So let's get serious. What do we have here on Euro USD? So I will delete some price action. Let's say to here. All right, so let's analyze this market from here. What do we have? We have wave A, wave B, which did not close below the low here. And you can see always, guys, when we have a reversal, price action will make some sort of a double bottom or triple bottom or whatever. And you see how we had here the double bottom, and then we had the impulsive move breaking the structure on the left, which is a very, very nice confluence. Then we had the pullback, which is wave B. So wave B did not close below wave A, the low of wave A, so we had an amazing opportunity. And you can see the Fibonacci was perfect, so we had a very good opportunity here for a long bias, but still we don't have a trend line. When wave C pushed and broke the high of wave A, that's when we can introduce the trend line. And this is our trend line. And what do we do, guys? We usually wait for the trend line to get retested and possibly a Fibonacci level. On this occasion, we never got the confirmation that price action is holding. So we had, if we include the Fib, we have the 61.8%. But looking at the candles, looking at the psychology of the candles, do you think this is going to push up? Because I don't think so. I see only bearish pressure. But this is not the point of